Good morning, good afternoon, or good evening, depending where you are on the planet. And welcome to the Monday, the 10th of March, Bull versus Bear webinar. Steve Miley here on the Call for Trade Day. Well, first of all, I guess apologies in order. So the US went over to US daylight saving time this past weekend on the Sunday the 9th, and the rest of the planet hasn't. We do move, and a lot of the planet doesn't move to daylight savings time anyway. Most of Asia and Africa doesn't. And in the UK and Europe, we do, but it's not until now the end of March. So for these next, I think it's I think it's actually 3 weeks. For the next 3 weeks, the time difference between the US and the rest of the world is different by an hour, and certainly it's different by an hour to the UK and Europe, which is I'm in the UK. So and even though I've written about it here in the macro matters we got on the screen, it started to slip my mind that I should have been doing the webinar 1 hour earlier for our US traders and on the US time zone. Given that as well, that all the data is, the primary data is coming out of the US as well. So we will be moving it forward as of tomorrow. So as of tomorrow, if you're in the US, you will have it as your normal time. So that's 6:30 Central, 7:30 Eastern. That's the normal times. It will be at that time. I appreciate we're running an hour later here. If you're in UK and Europe and the rest of the world, we're actually kind of at the same time. But going from tomorrow, we're going to be an hour earlier. And then in 3 weeks' time, it kind of sorts itself out a little bit in that we're in UK and Europe, we're back on the same time difference to the US, but the rest of the world isn't. So some confusion in here. My apologies for being an hour late. We're still getting the webinar out anyway. And going forward, so if you're in UK, Europe, and rest of the world, if you're in non-US tomorrow, then the webinars is going to be an hour earlier than this. It's not going to be at this time. It's going to be 1 hour earlier than this. Okay, let's get on and run through our usual Monday run through. So take a look at the bigger picture, the macro matters and the macro summary. You can see these if you're watching the recording or live. Below where you are now. So obviously stocks were significantly down again, between 2.4% on the Dow, 3.5% on the Nasdaq, 3.1% on the S&P. Markets, European markets outperforming, Asian markets outperforming. US is leading the way lower because of geopolitical concerns, concerns around a slowdown in the US because of tariffs on Canada, Mexico, China, plus the bigger geopolitical concerns around Ukraine, Russia. So all of those are adding to negative. Stock markets aggressively selling off. We're getting into correction mode now with some of these markets here. I think the Nasdaq close to being 20% off its highs from earlier this year. So all quite negative and continues to be negative going into. And the reason the US is underperforming is Europe is, pretty much defense stocks are holding European infrastructure stocks because Europe announcing extra spending on infrastructure and on both on the infrastructure and on defense. So those sectors are helping the markets in Europe stay more buoyant. Still going down, but to a lesser extent than the US. And also, despite what Trump says and believes, but there is more chance that tariffs are going to end up harming the US more than it harms elsewhere if they're the instigators. So potentially the US will be the first to. I mean, it doesn't mean the rest of the world doesn't go into recession, but if US goes into recession, it could easily go in first. So none of it good at the moment for the overall outlook for stocks. So saying bearish. We had kind of mixed data. PMI data actually last week was kind of mixed in here. The manufacturing, I think, was slightly worse than expected. Services slightly better than expected. US employment was only just a slight miss last week, but on the NFP data, but the unemployment rate did tick up by 1/10. That's a little bit of a concern. And the big focus this week is going to be on the US CPI inflation data, which we have on Wednesday. And just reminding you what I was saying there about the data, the US clocks changing to daylight savings time. The only real interest on the central bank side, you get Bank of Canada on Wednesday, so watching out for that as well. So those are the main headlines from last week, and what we're looking at this week is really all focused on the US CPI. Very little, as you can see in here, from the US before that. It's fairly quiet start to the week, but all the geopolitical tensions, all the tariffs, and Ukraine, Russia is going to keep markets guessing. We are due to also have US meet Ukraine in Saudi Arabia to discuss negotiations towards peace. So we'll see if that fares any better than obviously Zelensky's visit to the White House a week or so ago. So we'll see what that comes from that. That's also going to be a bit of a focus going into tomorrow. Just a reminder that the Fed meeting is the 19th and 20th of, actually get that right, is the 18th and 19th of March for 2025. And we're now in the blackout period. So we have no Fed speakers over the next week and a half. Looking at the data today, it's light, as you can see, industrial production out of Germany. Nothing really significant to watch as we go into today, but watch out for all that geopolitical, all those geopolitical risks. Outside of the US, Mark Carney wins race to be Canadian leader. So Carney is the new Prime Minister in Canada. Trudeau's stepping down. And then just to pop out from here, US stocks lead global slide as growth fears mount. So in this Tesla, Nvidia, other tech shares lead pre-market losses going into today. Futures are down. Treasury is up in price, down in yields again because of concerns. Trump and Bessent both warning as well of economic disruption. So even Trump is now saying, things are going to get worse before they get better. So futures decline as tariff concerns persist. Tesla is getting beat up as well. A lot of negativity around Tesla because of Musk's role in the government, so Tesla getting hit hard as well, and Treasury's going higher. Trump talking about a period of transition for the US economy, which won't be taken as he avoids recession call, but there's a lot of investment bankers out there at the moment. A lot of the major research houses are putting out concerns around potential US recession. Trump chaos pushes central banks into the shadows. As ever, I've mentioned this many times on the calls. If you were around at the last Trump meeting, at the last Trump presidency, the central banks get pushed to the side, and what the central banks are doing and saying is far less significant than the potential impact from the fiscal impact from what Trump is up to. HSBC downgrades US stocks. We're getting there already. Look, turns bullish on European equities. So looking for European equities to outperform. And going into this morning, you see the Hang Seng got beat up, nearly down 2%. Nick actually had slight gains in here, but you see European stocks this morning. UK FTSE down 0.4, German DAX over 0.8, the French CAC down 0.3 in here. And if we go to take a look at the futures this morning, we see Nasdaq really getting beaten up, 1.5% down, nearly 1.5% down, 1.2% already on the S&P. And if we look at the Fed Watch tool, although we're looking for no rate cut, this is actually did tick up slightly for March. But if we go into June now, only a 15% chance that we haven't had a rate cut by June. So the market now starting to really price in for June. And even now, look, 60%, around a 60% chance we haven't had a rate cut in May. So now the market even now starting to price in a rate cut by May because of concerns about, what's Trump's done already and potentially a US slowdown. So potentially, we had previously the first rate cut was expected really around July. Now we're looking at May, and previously we're looking for maybe one in the year. And now the market pricing in here, look, 350 to 375, probably 3 rate cuts this year, and maybe more. So we were already pricing in one pre-Trump taking the reins, and now we're pricing in 3 because of concerns of recession going forward. Bonds pushing back, even though we had a little move back up to slightly higher yields, moving back this morning down towards lower yields. And we remain, even though we did have that move back down lower last week in price, we remain bullish across the board in here, particularly at the short end. And the short end, remember, more of a reflection of the interest rate, the long end more of an interest rate reflection of the economy. And we can't, we can't expect anything but further downside pressures, going into the day, as we've written this up over the weekend, remaining bearish on both the S&P and Nasdaq, lower lows and lower highs, big topping patterns. Markets now at their lowest points in years since, September, October last year, and looking like potentially they could go significantly lower. So just watching out. And nothing really to add in here. If I just pop this out, we did get an intraday rebound on Friday, so kind of avoided worse damage. You got actually a decent rebound into the closing here for both the Nasdaq and the S&P, but most of that rebound now given up already, and we're back down towards Friday's lows. So real risk that we can go below Friday's lows and maybe deeper into today. So, and if we look in here on the shorter term charts, on the 30-minute charts, there's the rebound, sell off and rebound on Friday, and we're giving nearly all of that up, going into this morning, and then in the pre-market at the moment. So market's looking pretty vulnerable in here from my perspective. There's the trend line we drew last week, the market flirting with it and then failing back down lower, and so all risks for further new lows in here. We did flirt with this trend line here on the S&P, the more accelerated one. Just 1 second. Hey, look, actually the S&P, this more accelerated one. Where's the more? Let me really put the more accelerated one on in here. Through here, like you were sort of had a flirtation with that, but now the market back down lower anyway, and nowhere near this longer term trend line that comes all the way from the end of February. So it all looks very, very negative in here for me. Looking for other markets to move potentially lower, making new lows today. And we've got no real news, but obviously watching out for anything on the geopolitical front. And then tomorrow we have the talks between the US and Ukraine, so that's going to be interesting as well. All right, guys, and then Wednesday CPI. I'm going to wrap it up there. I'm going to wish you all a great trading day. Remember, tomorrow we'll be back to the normal US hours, so 6:30 Central, 7:30 Eastern. It'll be an hour earlier for everyone in the rest of the world going into the for the next few weeks. And if you're outside the UK, Europe, it'll be an hour earlier just going forward until the US comes off of daylight savings time. For UK, Europe, for the next three weeks, it's going to be 1 hour earlier. If you're in the US. In the Americas, then it's going to be you're back to your normal times. Apologies for the 1 hour late today. My bad. All right, guys, have a great trading day. Take care, stay safe, and I'll be back with you with or myself. I might could be Duncan actually tomorrow. I'll be back with you with another Bull versus Bear webinar on Tuesday. Bye.